Hello and welcome from me, Philip Nothard, and Curtis Hutchinson to this special COVID-19 Motor Trade Radio podcast brought to you in association with eBay Motors Group.
Many thanks for joining us for this latest in our series of special interviews with industry leaders during the COVID-19 crisis. Today's special follows our conversation last week with Virtue Motors CEO Robert Forrester and our chat earlier this week with the IMDA chairman Umesh Samani, both of which are still available to stream online. Our special guest this morning is Mike Jones, chairman of ASE. Welcome back to the podcast, Mike. And how's home working going for you?
A little bit of the pressure has gone now that we're no longer homeschooling and the kids are on Easter break. But no, everybody's healthy, which is the important thing, trying to do the best to get the information out whilst also making sure everybody stays inside and stays healthy.
Yeah, and obviously you've been talking to a lot of dealer owners and managers since last week's lockdown started. What's your take on the mood in the dealer community at the moment?
I mean, we're all clearly dealing with unprecedented times. We can't really hark back to anything. The banking crisis, we were able to trade through. It was a challenge for everybody, but we could trade through it. So I think everybody's a little bit scared as to what the future might hold. Now, that's changing as we get more used to it. People get a better plan as to what they think is going to happen, have a variety of contingencies in there. But there's been an overwhelming desire amongst the people that I've been chatting to who are looking to protect the staff, protect the customers and help out wherever they can. So the first action has been to sort of close down and then almost start again and work out where we can help the economy and the key workers. From an ASE point of view, people are clearly very hungry for information. They've been asking us a huge stream of questions, some of which we've got the answers to, some of which we can give a best guess on the basis the government haven't defined it because they're drawing these things up quite so quickly. So now we've been putting out lots of discussions, web pages, blogs, etc., plus doing interviews like this to try and provide some information and give people some guidance. Because I think the one thing that's most important during all of this is that everybody continues to communicate and we work out the best way through this.
No, you're right, and as we were talking before the show, I mean, it's an ever changing. It's changing at such a fast rate, isn't it? With new things coming out all the time to help with businesses and other things that's happening. So, I mean, clearly there, Mike. I mean, it's not the right time to talk about dealer profitability. It's more of a time, as you mentioned there, about cash flow. And on the subject of cash flow, I mean, what advice are you giving dealers at the minute in the best way to manage their cash flow throughout this sort of evolving crisis on a day-by-day basis, really?
Yeah, I mean, cash will, particularly at the moment, be king, and people are working really on sort of three different streams, getting in all the cash that they can now, increasing the headroom that they've got and the facilities that they've got available, and then reducing their outgoings. I mean, with regards to getting the cash in, people are drawing down on funding lines. The majority of the funders are being supportive as long as people aren't going out actively buying stock at the moment, albeit I did hear of one yesterday, a funder looking at reducing funding lines, which is really not very helpful at this particular moment in time. People are looking at increasing the headroom. Most of the government support from a loan point of view is provided through the banks. So people are producing sort of 3 and 6 month cash flows, worst case scenarios, even worst case scenarios, planning for the government support to be late from a furlough point of view, speaking to the bank to try and work that way through it and give themselves some headroom and some facilities. And people are also cutting back on outgoings, not paying anything that they don't have to, furloughing the vast majority of staff. As I said, albeit I think we need to plan for there being a little gap between when we need to pay the staff out and when the money will come in from the government. But most people are sort of adopting a don't pay it, don't pay bills now position to then be in a position to argue about it further on down the line. picking the key things that they absolutely need to keep going and working on that. We're then working with people as well as to what we think the cash flow implications will be of when we open back up. We've got a lot of March deliveries that are still to be done. That has a cash flow implication. Plus, we've got the catch up. And historically, we tend to find that new cars might take a little while to wake back up once we're all allowed out and about again. Service again takes a little bit of time to sort of prime the service department. It's very difficult when you can't plan for an opening date as to when you can start booking things in, but we usually find that used cars moves really quite quickly. So it's planning what the cash flow implications are of that and how people can best look forward to a return to normal retailing.
And have you, sorry, just before I move on to the next bit there, but just on the in terms of the cash flow, and obviously there's support coming out from the government and house of claim and things like that. Have you heard anything? Because I think there's been a little bit of sort of rumours that it's not an easy process in some cases, and there are obviously lots of challenges, because as we were talking before the show, that it's kind of get the decision out and then sort the detail out later in some cases. Have you heard anything on that, or in terms of the banks and the processes, and for these grants and things like this? Because there is a bit of pushback on this, I think, at the minute, isn't there, that it's not that easy because not everything is set up and in place for the support.
Yeah, absolutely. I mean, with regards to the loans, albeit it's an issue we might come on to later on, that a lot of motor retailers don't actually fit the criteria for them. You've got to go through your existing bank, and they've basically got it. They've spent ever since the financial crisis. They've been working on giving people lower overdrafts and only lending to people who they think are sound. And now they've suddenly got to get £330 billion into the market, either through the loans or the paper scheme that they've got with regards to the corporate finance facility. So they're just being, the banks, credit teams, etc., are being absolutely inundated with requests for extensions to existing facilities, and they're having to make the rules up as they go as well. I mean, overnight I've spoken to the heads of two of the bigger banks, or the motor retail arms of two of the bigger banks, who also look after a lot of the funding facilities, to find where they're at, and they're grappling with the as we have with a variety of other things, they're grappling with a lack of clarity as to exactly what it is they're supposed to do. So they're just doing the best that they possibly can to try and support everybody. We've seen it with, one of the items that hit the press was with regards to whether there were personal guarantees on these loans. I mean, NatWest RBS came out relatively quickly and said they weren't doing it, and then a variety of the other banks then had to sort of follow suit that they weren't taking PGs on loans under £100,000. So they are. This is evolving very, very rapidly. I mean, it's only just over a week since we all went home. And if you think the amount of things that have changed over the course of that time, it's huge. And we've got to expect some of this to be worked out over time. The one thing retailers need to do from a cash flow point of view is just try and make sure they've got sufficient headroom for that period whilst it's all worked out, until the cash effectively comes back into their bank.
Yeah.
Now, Mike, we know garages are exempt from the lockdown. Can you share your thoughts on how the dealers you're talking to are tackling the issue of after sales, and whether they should be open for anything other than assisting key workers and NHS staff? And also be interested to hear your take on whether you think the 6-month MOT exemption is what was actually required.
I mean, I think from the dealers that I've been speaking to a lot over the course of the last week, they're sort of they're trying to be supportive wherever they can, whilst also looking after their staff. So a lot of them closed and then worked out how they could reopen. We're looking for volunteers as to who wanted to continue to work, to try and make sure that we can continue to keep the emergency services vehicles on the road, and also look at the key workers, whilst also making sure that people are only taking risks that they're happy with from an employee point of view. Some businesses have come out with alternative solutions, so they're using their rental car fleets, their courtesy car fleets, etc., for key workers whose cars are broken down, so they don't have to worry about repairing them at the moment. They can just take a free vehicle for the period, which for me seems a very moral standpoint. I mean, some of the independents are very much trying for business as usual, but I have a moral issue with that from a brutally personal point of view. I think there's a big difference between whether they can open and whether they should open. We're all in this together, and we've got to try and reduce the spread of this thing so that the NHS can cope and we don't flood it with a load of people who need emergency care. And I personally think we should only be delivering face to face the minimum that we absolutely have to do to keep the official show on the road. As far as the MOT exemption is concerned, I think it was good that it came out. It was, again, as with all these things, there's always bits that fall between the gap. I had a car that was due to be MOT'd on the 29th of March that still had to be MOT'd. So that car was still all the 30th of March the end of March registrations from 3 years ago. They all need to be MOT'd. We've got issues with regards to whether those cars are still on PCP, whether they're with the customers, etc. So there was a bit of a hump, but I think it's vital that we, from a wider point of view, we don't go out and do unnecessary things. There are gaps in there. There's issues with regards to if you're driving around and you're out of MOT, then you're certifying that the car's roadworthy. Well, what happens if you have a crash, etc., etc. But they're running around trying to deliver all different things for every single bit of the economy, and I think the government's doing its best, albeit that there are some gaps in what they're putting out there.
Yeah, it was something we discussed with Robert Forrester the other week, and again with Umish, that it's whether the 6 month is right or wrong. But it was, if you listen to the two interviews, I mean, Robert was talking about, before we knew that there was a request in to government about doing something about the issue around MOTs, and then by the time we interviewed Umish, it had gone through and the 6 month had been made, the decision had been made. Now, whether it was right or wrong, it was a case of they did something, didn't they? They acted and they did something for the industry. So, no, it's a difficult one. And just touching back on, not necessarily just on the cash flow, but thinking about the dealers specifically around this, what are you advising in terms of, packages that are available? And we know that things are changing and they are, every day we wait for any updates from the government. But as of now, what packages really should be the dealers be thinking about and really applying for at the minute?
I mean, the big one that the whole industry is moving towards is the what they call the coronavirus job retention scheme, which is the ability to furlough people with the government effectively reimbursing 80% of the wages up to £2,500 a month. The vast majority of the motor sector is now in this, or the retail sector is in this bucket. We've been forced to close showrooms, and the majority of staff have been furloughed. We need to make sure that people aren't providing services or generating revenue. There's an issue in that the people must have been employed at the end of February. So anybody who switched job at the start of March then has to go back to their previous employer and trying to get retaken on and furloughed there, which is a challenge. But this is going to be the one that is works for the majority of the trade. There are a number of issues in there. They haven't yet issued the portal out that we need to apply for the income through. So the question is, when's that going to come out, and therefore when are we going to get the check back in? There's a question around what is earnings, particularly from a salesperson point of view. From an ASE standpoint, the guidance, the government guidance, is contradictory in a couple of different areas, and we believe that we'll ultimately end back where the legal cases have defined earnings over many years, and as we do with holiday pay, where the normal commissions of a salesperson are included within their salary. It's included within their earnings as far as the UK law is concerned. So we think we'll end up back there, albeit there's a number of people seeking clarity on that. But no, most people are going after the furloughing of employees for the 3-week period. Then we touched on it earlier on, the business interruption loan. In theory, that would be brilliant for an awful lot of the motor trade. The problem is that there's a £45 million turnover maximum on that loan. and the vast majority of dealers and dealer groups are in excess of that 45 million. So in theory, they can't at the moment apply for it. The facility out there for larger businesses, the corporate financing facility, requires you to issue paper, get credit ratings, etc. The public companies might be able to do that, but the private ones are too far behind the curve, I would imagine. So we could do with the government extending the 45 million pounds, albeit that they haven't done that over the course of the last week. Other things they need to do is rates for the smaller businesses. They may need to, you'll get a business rates holiday. There's rates rebates for the smaller businesses, and the council is supposed to contact you to give the rebate. I wouldn't rely on that. I was advising somebody yesterday, a small business, and their council have put up a form that you need to fill in. So you had to go online onto their website, download a form, fill it in, and send it back. So that's completely in contravention as to what the government said was supposed to happen. But so I would make sure that people are in touch where they qualify to try and make sure that they get these rebates. We're deferring VAT, so this quarter's VAT shouldn't be payable, albeit we need to cancel the direct debit to make sure that they don't need to. The government doesn't take the funds. People are applying for time to pay arrangements as they've always been able to on other government payments. There's a support scheme for the self-employed, which I know hits a certain part of the motor retail sector. We can get SSP paid, and there's cash grants for smaller businesses. So there's a huge raft of different things that people can apply for. The rules aren't exactly perfect at the moment, and certainly with regards to furloughing, I think we're going to be making a claim and then almost arguing about it further on down the line. But in the nicest possible way, if we're still in business and in a position to argue on it further on down the line, then people have done a good job.
Yeah.
Now, Mike, one of the first things I noticed last week when I ventured out for my first run after the lockdown was just how quickly my local, it was Ford and Honda dealers had moved to clear their forecourts of used cars. Is this something that you've advised dealers to do? And what's your best advice in what dealers should be doing, I guess, in terms of their stock during the lockdown?
I mean, people very rightly and very quickly move to physically secure the stock. If we're not going to have anybody on site, or to enable us not to have anybody on site, we obviously need to make sure that the cars are out of the way. And so people have, where they can, people have done that. Alternatively, they need security arrangements to make sure the cars are all kept okay. We're talking about having signs in the windows, basically telling people that we've taken all the keys and the V5s home for any cars that are physically there. With regards to what they should be doing, and we've seen this around the world, but we need to make sure we're keeping the online presence and interacting with customers as we go through. It's a little bit like we have on an annual basis at Christmas, where people get Christmas Day out the way. They're then stuck with the family for another week, and so they start surfing for cars online. And then we get a reasonably fast start in January when people are all back and awake. And that's very much what we've seen overseas, and also very much what we're expecting in the UK as we go through and people have got over the shock of being at home and the fact that the world's changed. Then the digital channels do open up, and we can start building a pipeline for when we are allowed to start back. We can take deposits, we can book people in, we can sell cars for delivery later, with the right level of sort of online interaction. And the danger is that you cut absolutely everything back to the bone. And I think it's important that we keep communicating with customers, and we keep being able to help them through this crisis, and also build a pipeline for when we come out the other side.
Yeah.
So they should really be carrying on managing their incoming leads as they would normally.
Yeah, and we've actually seen, I think people need to do it based on demand, but we've seen overseas where they've had to actually bring additional people into the online teams and the call center teams to cope with the volume of traffic and the volume of interaction. But they just need to make sure they're monitoring it and make sure they've got enough people manning the computers and manning the phones to get back to customers in a timely manner. Because I mean, we're impatient at the best of times, but if we're just sitting around with nothing else to do, then I would imagine the response times have got to be really quite rapid, and there will be a big prize out there for the people who can get back quickly.
Yeah, definitely. And thinking about recovery and exiting out of this, that ASE do operate globally, and I know you've got offices in Italy, Spain, but you've also got offices in China and the US. And we know China, there's been a lot of news about China on the quickly shut down, obviously, at Chinese New Year, and there's activity now back in China. Are there any learnings that you can share that you've got from any of those operations that you're in, particularly with China, to the audience?
Yeah, I mean, China's clearly the furthest ahead with regards to this. They were the first to lock down, and they did it in a relatively brutal and fast way, albeit they were all working. They were all working remotely. And when we saw in January they did 1.8 million cars. In February they did 250,000. So a massive drop. We've seen in March, we haven't got the final numbers through, but it looks like they're going to be hitting around 1 million. So there's been a relatively sharp bounce back, which I know was reassuring to people here. And from the discussions that we've had with the brands over in China, they're still looking to hit the level of sales that they were originally planning for 2020, or certainly from a public point of view in the discussions with us. So that's relatively reassuring. We saw the retailers getting quite innovative in how they were working remotely and doing remote handovers, use of drones, and things like that. But we also saw a raft of people building an online presence through providing advice on YouTube, etc., and generally priming the market. So they were building with the number of customers they'd been speaking to, but with also from a brand side, an awful lot of incentive money to make sure we had that fast start. The one learning we have had as well from some of the European markets is just making sure you read the mood of the market. Everybody's desperate to try and keep income coming in, but I think if you're seen to do the wrong thing, then people will remember it. And there is a spirit out there at the moment where people need to make sure that they time those sort of go-to-market, we're getting back ready to open up again messages for the right time when the sort of mood music's working in that direction.
Yeah.
Well, Mike, I think your point there about reading the mood of the market is absolutely crucial. And many thanks for joining us today and sharing your perspective on some of the many concerns facing dealers at this difficult time and how they're managing their businesses during the lockdown and the sort of practical things they can keep on doing during the lockdown. So, many thanks for sharing that with us.
No problem at all, and thank you for the invite. I mean, from my point of view and from ASE's point of view, we're just trying to get as much information out there as we can to help people through it. We're putting lots of stuff and continually updated guidance on our website in the resources section, and also on our LinkedIn pages, just to try and get the information out there. The government helps changing so quickly. We need to update on that, but also some operational guidance as to what people can do now. And we're soon launching a sort of back to work guide, as in how people prime the market and what they do immediately as they start. We're obviously helping people put together cash flows and loan applications. So if anybody needs any help, then please feel free to get in touch. I think it's vital that we get as much information out as we possibly can, but obviously it's also most important that everybody stays safe. So it's good to hear you guys both so healthy, and hopefully that stays that way.
No, same to you, Mike. Same to you. It's been an absolute pleasure as always, and I think we'll probably get you back on at some stage, depending on how long we start to. We're in lockdown for, but we'll, there's still advice there, and as you say, that back to work guide is going to be essential, isn't it? Because it's like you say, it's reading the market and doing the right things. We know that coming into the shutdown, as a business, Cox Automotive, is moving from physical to digital and then shut down entirely, and it's how then that goes back into and is it the new norm? It's not, people are talking about back to normality, but we're potentially going to be into a new norm, aren't we, at the end of all this? So it's going to be essential that, as you say, everyone keeps talking and keeps sharing the knowledge. So it's been an absolute pleasure as always, Mike. So you've been listening to this special Motor Trade Radio podcast brought to you in association with eBay Motors Group. So please like and share on social media, as it's important during these times, as Mike has just said there, for the dealer community to come together and share their experiences. So that's all from Curtis and I, and we'll be back as normal on Saturday with the industry headlines. But watch out for more special podcast interviews as we work through this crisis together. So again, thank you for tuning in, and please stay safe, everybody.